Good afternoon, everyone. Welcome to my biweekly video update. Today is Thursday, July 12th, 2012, and three things I'd like to talk about today are the economy, the markets, and the accounts. First thing, looking at the economy last week, we added 80,000 jobs. The good news is it was higher than the month before. The bad news is it's just not where we need to be. Moving forward right now, the market is focused on earnings. Alcoa came out with earnings that weren't great but weren't terrible. However, since then the stock has tanked. A lot of key earnings coming out is Google this afternoon, and the big ones tomorrow, JP Morgan and Wells Fargo. I think these two are going to be very significant on their guidance and where it's going to lead the market moving forward. I'm a firm believer, and I don't think the market can move much higher without the help of the financials. One other stock I want to take a look at, and I'm going to put a chart up with it as well, because it really is important, and it's Caterpillar. Caterpillar is a key stock when it comes to global growth and what the outlook is for global growth. Unfortunately, CAT keeps hitting new lows, which is really making me concerned. I'm going to put up that chart so you can see where it is. Moving to the markets, where we are right now, if you look at the high of the year, which is 1422 on the S&P, versus the latest low, which was 1281 back in early June, the exact 50% retracement is 1431, and that's where the S&P opened up this morning. For people like myself who are technical analysis people and kind of the tech nerds with the market, that's a pretty important level because it shows a 50% retracement. One thing I can guarantee is we're going to move either way, and obviously the market's was down over 15 handles on the S&P early this morning. It's come back to be down about 10. So we are going to keep moving in this range. However, one thing that we always hear, which I want to mention, is you hear the trend is your friend. Looking at the trend of the market, like things like CAT and the S&P 500, McDonald's, Nike, the trend has not been very friendly to these stocks, and that is very concerning to me, and it's also why we've avoided some of these areas. Other areas we've avoided are mid-cap and small-cap. We haven't been in there for a while because those trends are not friendly to us. Where the trend is our friend, that brings me to our accounts. We hold the utilities ETF, which is the trend, and you'll see it on the chart, is very friendly. The LQD, which is the corporate bond ETF, has done phenomenal, and it just keeps making new highs, and it made another one today. And then another holding that we added was some emerging market debt. All these things, the trend is our friend, and we are going to continue to hold them until things change. At some point, I would like to see the mid-cap stocks and the small caps come back into favor, but we sold these months ago, and we sold them at levels they are higher than today. Like I said, I want to get back in them. I want to get back in international and commodities, but the charts are just not saying it's that time, and what you're seeing on TV right now is not going to help the charts. With that, please feel free to contact me with any questions. I'll here all the time, and I hope you have a wonderful weekend. Thanks very much for tuning in. Bye-bye.